Be Wealthy and Smart, episode 910.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why wealthy investors remain bullish on the stock market, and in particular, with technology stocks. Now, this was an interesting article to me because I've been noticing there's so much negativity and bearishness around about the stock market. Just about every YouTube channel, every article I'm seeing, commentators, interviewers on television are talking about negative things with the market. But this has been going on since the COVID market, so I'm kind of not surprised. But on the other hand, there's just so much negativity, it's overwhelming. So this article was really interesting to me on CNBC.com because it said the opposite, that wealthy investors remain bullish on the market. So I wanted to share this with you. This article was written by Eric Rosenbaum, and there's 3 key points he starts with. Number 1, the recent 900-point Dow Jones Industrial Average drop seems like a blip as the stock market quickly reached a new record. But market jitters were back on Tuesday with the Nasdaq leading losses and some big tech earnings names like Apple declining before their second quarter reports. His second key point, investors with $1 million or more in a brokerage account they manage on their own came into third quarter earnings bullish on the economy and stocks, according to an E-Trade financial survey. Key point number 3, there was a significant uptick in wealthy investors who said tech would be the best sector in the third quarter and think old favorites in tech may be positioned to lead as they have for so much of the past decade. So I guess what they're saying is the same old tech leaders they see leading again, and let's hear the rest of the article. It says, the recent Dow Jones Industrial Average one-day plummet of 900 points didn't stick, but the Nasdaq reversal on Tuesday led the market lower, and the Dow and S&P 500's first day down in 6 days came unfortunately right ahead of big tech earnings. A recent survey of stock traders with $1 million or more in a brokerage account shows one reason why the bull market quickly resumed and why any single-day decline in stocks, tech, or otherwise may not stop the current bull market run from continuing. Wealthy, veteran investors were a little more bullish coming into third quarter earnings than they were just 1 quarter ago, and remained convinced in the strength of the U.S. economy and the opportunity to chase profits in the tech sector. Millionaires describing themselves as bullish rose by 7 percentage points quarter over quarter, from 58% to 65% of investors, according to a survey of self-directed investors from Morgan Stanley's E-Trade Financial. The largest group of millionaires expect gains to be modest, with a little less than half, 46%, forecasting a 5% maximum gain. But very few foresee the big drop that bears have feared. Only 6% of survey respondents said the markets will fall by 10% or more this quarter. They are still optimistic that the bull run will continue, but a bit more realistic in expectations, cognizant of where we are and just how far equity markets have rebounded, said Mark Lowengardt, Managing Director, Investment Strategy at E-Trade. The E-Trade survey was conducted July 1 to July 9th among 898 self-directed active investors, with results from 157 investors with $1 million or more of investable assets broken out exclusively for CNBC. The wealthy have an improved outlook on the U.S. economy, even as inflation fears persist. The percentage of millionaires who graded the economy an A or B grade this quarter was up 13 percentage points since the second quarter, rising from a minority 39% last quarter to 52% at the start of the third quarter. Those who seem unsure in the second quarter, 44% who graded the economy at a C, have moved into the more bullish camp, with that view falling to 29% of millionaires this quarter. 41% of millionaires described the current economic period as expansionary, which was up from 30% who held that view last quarter. Optimism has the psychological momentum, said Lou Altfest, CEO of Altfest Personal Wealth Management. But he added that the virus still has the potential to reverse that, evidenced by the Dow's 900-point drop as the Delta variant came into focus. The CDC is now revising its masking guidance again to be more cautious indoors, though he thinks the bigger risk to investor sentiment is that growth is just not as good as current expectations. The optimism I have shared for a longer period of above-average growth is what we can still have, but the logical situation is sometime next year, less than a year from now, we will be looking at normalized growth, and that isn't what people want to hear. It is the reason that the bond markets have not reacted to Fed discussion of inflation and rising rates by pushing yields higher. In fact, fears of less than stellar economic growth have sent yields down in recent weeks. So I just want to pause there and say yields really have dropped quite a bit. And if you haven't listened to my podcast about why now is a great time to refinance, I encourage you to listen to that because rates are the lowest that they have been in a very long time, and many mortgages are available under 4%, under 3%, some even lower than that. The article goes on to say, Altfest said investors want to believe in the rosy outlook, and the year-over-year comparisons are large given the sudden recession caused by COVID-19, but if economic growth moderates to 2% to 2.5%, that could be a psychological sobriety event for investors, especially in light of high U.S. stock market valuations. There was a lot of gasoline thrown on the fire from the monetary and fiscal perspective, Loengart said. It is important to keep in mind that growth remains elusive. We're starting from a low base out of the pandemic and highly accommodative policy, but it's still going to be challenging. After even the biggest tech names proved vulnerable to temporary selling action in the second quarter, the wealthy rate tech as the third quarter's best bet. Millionaires who say the tech sector is the best opportunity for gains in the third quarter increased by 12 percentage points, an increase that came amid lower bond yields and tech's continued strength, acting almost like a proxy for bonds, according to E-Trade. 46% of the wealthy investors surveyed by E-Trade picked tech as their top target for gains this quarter, up from 34% in Q2. Tech's great appeal in large cap is delivering earnings rain or shine, Altfest said. I think technology has always been cyclical in people's minds, and for good reason, because people have always gotten hit from high price to earnings ratios. But this cycle from 2008 on, it's not like we just had an IBM. Now we're seeing many growth companies and less competition. End of article. I think what wealthy people see that is particularly interesting about technology is high growth rates that continue to remain higher than normal companies. And when you have technology growing faster, making more money, having higher profits, it is what is going to drive the stocks higher. And so I think that they're seeing the tech leaders continue to lead and continue to have dominant market share. So I would be in this camp, along with what this article is saying, that big cap is the place to be. And that's where I am also optimistic. I'm not in the camp of a huge bear market or a huge stock market crash. But like I said, that is everywhere right now. I mean, I cannot look at anything without hearing somebody be negative and say the stock market's going to crash. That doesn't mean we won't have pullbacks. It doesn't mean that we won't have our down days like yesterday, but I'm just not pessimistic. So I wanted to pass along this optimism to you. Maybe you're seeing a lot of bearishness too and you needed to hear that. And hopefully having someone else be bullish makes you feel a little bit better. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.